Might check 1 2 1 2. What it do, what it does, man. We finna go over a quick analysis of the Nasdaq. Let's get active, man. So last week was definitely a negative week for me. So I started the week off negative the first week. So I'm down probably like 100 handles. Right. So this is NQ. So basically the first thing I usually do is I go to the weekly chart just to catch the direction, just to see, just to find some weekly levels. Right. And it's best, and it's always best just to see where you're at. Take your time. Hold on right quick. I gotta share this on Instagram. Right quick. Be live in effect. But yeah, it's always best to go to your start on the weekly and then go to the daily, right? Then you go to the 4 hour, then you just keep going down so you can form your basically your analysis and your bias. Right. Give me a moment right quick so I can share this right quick on IG. So basically just showing you what I do when I come to the market, so I could prepare for me. Because I trade ICT concepts. So but now remember everybody has a basically I ain't even put I was live, I'm tripping. Everybody got a different approach of how they actually trade. So I'm saying, so I'm kinda a little I'm kinda like a aggressive trader. So I'm saying, but I'm trying to follow my rules, you know what I'm saying? And just keep becoming better every day. Live, live right now on live right now on YouTube. But yeah, man. So it's basically all about just getting better every day, right? You becoming a better trader every day, right? By following your rules, becoming disciplined, right? Understanding that there's 4 reasons why the market moves, right? Understanding your what you good at, what you bad at. Damn, where do I put this shit? I'm putting it right here. Live right now. Click the arrow. I'm almost done. Oh, shit. All right, perfect. Let's get it. All right. All right, so let's get it. So the first thing I usually do, right, is I go on the weekly date and I go on the weekly chart. So now I'm on the weekly chart. So you want to see last week's high. You always want to chart last week's high, right? And basically where you at right now. So this is the last week's high, previous week's high right here, and this is the other one. So you might as well just chart both. But you see how it actually is sweeping. So I'm saying, so we actually get a sweep of liquidity here. So right, so this is weekly low, and it's always best to just notate everything. Weekly low. This is a weekly high. Weekly high. Zoom in right quick. This is last week's. This is the weekly low as I got swept. And then this is another weekly high. All right. So now I'm looking at the weekly high. So I see we are bullish, right, on the weekly chart because why? We just keep going up. We keep sweeping the highs, right? But you see what we did? We swept this low, right? But we didn't close below, right? So in the meantime, between time, and you see here, there's a weekly fair value gap. So I said, yo, why is it blue? I mean, why is it? So I'm saying, but you see how it's holding here. So you just got to be mindful of that. You don't want to just yeah, I don't want to extend it. So got a weekly, we got a weekly fair value gap, and you see the bodies are holding. All right, so we're in literally a weekly fair value gap, bullish at that. All right, next thing I'm doing is I'm looking for any new week opening gaps, any new day opening gaps. Mm, all right, man. So what we got? What we got? So we got a new week opening gap right here. New week opening gap right there. Um, we have another one right here. Close open. Yep. We got one right here. So these could definitely act as resistance. These new week opening gaps could definitely act as resistance. All right. Do we got any right here? Yeah. So you see how this one closed here and then it opened here? So it's leaving a gap. So you see how this gap right here? So this is basically like a volume imbalance, right? But on a weekly or daily chart, it's a new day or new week opening gap. So that's what I like to notate so I can understand where is price going to. So you don't want to just keep drawing. You just want to draw enough to where it's around price. So now I'm gonna go on a daily chart. So let me just lighten up this zone right here because this is a weekly fair value gap. All right. Got the weekly fair value gap right there. So now we're looking for any new day opening gaps that's around price. So price closed here. Any new day. This one is coupled with a new week, so I ain't gonna draw it. There's one right here, but you already got a buy there closed. Okay, that's enough. So now I got my zones. Basically, like if you understand supply and demand stuff like that, I got my zones on where price can eventually stop at, reject that. So, oh, I'm tripping. I ain't go to the daily chart. Hold on, I want to go to the daily. I want to see what's going on daily because the same thing, the same way how you use ICT concepts on an intraday, you could use it on a daily weekly chart. So right, so you see how we might be bearish. So on a weekly chart, it looked like we're maybe still holding on. Right, we holding on to that bullish weekly fair value gap. But once it breaks below, because remember, it just swept this, right? So right now it's holding here. So we still have more sell side liquidity down here. So you never really want to like anticipate. You just want to chart your levels and then let price action tell you what's going on. Because if I'm bullish, I'm expecting it to do bullish things. If it's bearish, I'm expecting it to do bearish things, right? So I line my daily time frame up so I can understand the bias. So I see right here, these were all-time highs up here, right? This was all-time high. And then we get an aggressive, look at this crazy ass aggressive move down, right? Because it looked like we was targeting here. Looked like we was targeting here. So now, I kind of want to draw that. Because this is a daily liquidity right here. This is a daily low. Right. And then we get a monster rebalance up here. And I remember this where they created the S&Ts with ES and Q. So it's always best to trade to chart both ES and Q so you can actually maximize on seeing the S&Ts so you can get the protected highs. So I'm saying that's why I'm trying to do a better job of charting both of them and actually watching both of them at the same time so I can watch for the S&Ts so I can understand where's the So now this is a order block, right? This 1, 2, 3, this aggressive close down. This is a bearish order block, right? Because look, we have a close below. It closed below this low, right? So, but you see the fair value gap that's up here, the fair value gap that's up here. You see that? I don't, I don't even want to see it come up here because if I'm extremely bearish, right? If I'm extremely bearish and price comes all the way up here, this is basically is getting deep and deep into the mean threshold of the order block, right? So so if we draw our fib, if we go from the high to the low, right, of just this order block, this bullish candle, this bullish candle, this bullish candle, you see how it got 4 or 5 aggressive down close candles, creates the order block, right? Create a fair value gap. Now, this fair value gap is literally unmitigated, right? As in, it's never been touched before. So if it comes way up here, now remember, this is the mean threshold. The yellow line is the mean threshold of the order block, right? So if I'm bearish, I'm expecting it to come up here. Okay, we can allow it to dig up in here, right? Because this is the area where I'm expecting it to reject from. Tap here, then start coming down, coupled with this new week opening date, and it can just start targeting back to the downside, right? But this is on the weekly profile. Sorry, this is a daily profile. So right now, this is a crazy. We just swept these highs right here. But look what happened. We closed back underneath, right? So right now, this is basically what's going on right here. We have a nice sweep of these two highs right here. And look what happened. It actually created equal highs. So right now we actually have equal highs right here. You see how this is equal from here? Okay, sorry. From here to here. Why I keep doing that? Oh, I'm clicking the wrong shit. That's why. From here to here, these are equal highs. So price may want to come back to this, right? So what you gotta do is you gotta look on ES, right? Did ES sweep this high? So you can see if it's an SMT. That's how you can get the protected high, right? So at the moment, we have a rejection at this new day opening gap, but we have relative highs right here. So first thing I'm looking for, where can price come back to? Remember, price is going to do 4 things at all time. It's going to generate the highs. It's going to generate the highs and lows. It's going to take the highs and lows. It's going to rebalance to an inefficiency or rebalance to equilibrium of the range, right? So this fair value gap right here is still unmitigated. This is an unmitigated fair value gap, right? Actually, if you want to just draw a fair value gap, the last place it was some support, which was right here. This is the last area that was some support right here, right? Because look what happened. It came back, touched this zone right here, and it left it. It didn't have the willingness to come to the lower half of this fair value gap. It stopped right here, swept it a little bit, and just got up out of there. And it stopped right at this our new zone right here, which is a new day or new week opening gap, right? And then remember, these 3 down close candles, aggressive close above, is a new order block because we have a rejection in the area where I'm expecting it to reject at. We have a displacement away from that area, creating the order block or the change in the state of delivery right here. As it's coming down, it's creating the change in the state of delivery. The moment it closes above this bullish candle comes down, goes down, comes into the most sensitive part of the order block, and then it just distributes away from it, right? So now when it comes back down, look what happened. It just so happened to come right back to the around the open. Look what happened. It bounced here, then can't see. So right now, we are first thing. If I'm bearish, I'm expecting this. If I want to be bearish, I'm expecting it to do this. I'm sorry. If I'm bullish, it's going to come down and then go back higher because remember, there's relative highs up here, which is here. There's relative highs up here. And then one thing we know about new day and new week opening gaps, once it breaks above the new day or new week opening gap, you don't want to see it hang around the new day, right? So let's say we're bullish, we're targeting these relative highs right here. That's the draw right now. Come down, right? Hit this zone, come down, break out of it. Remember, this is resistance, right? When you break out of resistance, old resistance turns into new support. So when it breaks out, it comes back, retests it, and breaks up out of there, right? That's the bullish scenario. Back into the zone that we're expecting it to reject from, because that's how the market moves. The market, if for it to go lower, it gotta go higher first, manipulate, fake, it gotta fake you out and then go lower. For it to go lower, for it to go lower, it gotta go higher first, then go lower, and vice versa. So I'm saying, so that's why trading is kind of like a mind game in itself, because it requires a lot of thinking and it requires a lot of actually thinking, and it requires a lot of actually like knowing how to adjust. And if you know how to play basketball, you know how to Euro step and transition, right? That's why you guys just got to get better at you, right? Understand how what's good for you, what's bad for you. This is my journey. I'm on here because I'm literally this is easy. It's easier for me to do this than to just write everything down, right? And I'm just trying to like you know share my journey and my experiences because most people aren't even transparent. Most people ain't even going to show you everything. So anyway, so besides that, so right now I'm actually bearish. If you just ask me, so on my weekly profile, I would say I'm bearish because until we show otherwise, because look what happened, right? So look, let me just erase everything. Just straight price action and market structure shift, right? So now let's go like this. We was down here. We coming up. We coming up. We came down, right? Did we sweep these lows? No, we didn't. We came up, swept these lows. We still bullish. We came down, stopped at OTE, mean threshold, got up out of there, swept all-time highs. We were still bullish, right? We came down, right? Came back up. Did we sweep these highs? No, we didn't. Did we sweep these lows? Yes, we did. So we could be coming up to come back all the way down. So right now we're actually holding at this order block, at this daily order block. So price could potentially do this. You know what I'm saying? To sweep out these lows right here. This is what it this is like it, this what it was targeting, because look, it came all the way down. Look, it looked like it was hunting this low right here. Rebalanced up, came back, swept this shit right here, got up out of here. So we didn't sweep these highs. We didn't sweep these highs. We got a lot of we still have a lot of resistance above us, right? So I'll do it again. Remember, we're down here. We're bullish. This is a daily. This is a daily chart. We're bullish. We coming down. We make a high. Remember, the market going to generate liquidity. It's going to generate the low, generate the high. There are four reasons why markets move. Now it comes back. It rebalance to an inefficiency, which is this fair value gap right here, or a rebalance to equilibrium of the range, which is look, it came back to 50% of the range, right? Did it sweep out this low? No, it didn't. What happened? It swept this high though. We're bullish. This is just straight market structure shift. We're bullish. Swept all-time highs. Came back down, right? Did we sweep these lows? No. Did we came back up? But did we sweep these highs? No, we didn't. We come all the way back down. Did we sweep these lows? Yes, we did. Then we come back up. Did we sweep these highs? Not yet. So if we reject here and go lower, you see what I'm saying? So right now on the daily time frame, market structure is showing market structure is showing bullish. I mean bearish. Just straight off of just market structure. When we're bullish, we're making newer highs and making higher lows. When we're bearish, we're making lower highs and lower lows. Look, we're making this is a lower high. So look, this is a high, right? We didn't sweep that high. This is a lower high, right? Look what happened. This was the low right here. It swept these lows. So we made a lower low and a lower high. That's bearish. Then what happened? We came back down. We swept this low. And then we came back up. We didn't sweep this high yet. Bearish. So that's why I was like, we might be bullish for a little bit, come back down, and then hit here, and then just get up out of there because it looked like it was targeting this low originally from the first place. This low right here. As when it gave this long displacement down, it didn't sweep it. It got to generate. Remember, it has to generate. It has to generate. So that's why this low. I think that's why this low right here didn't get swept. So look, you telling me if this shit came from way up here all the way down here, you know how much points that is, bro? Bruh. Bruh. Oh my God. That's 1,400 points, 5,600 ticks. You telling me it couldn't sweep right here? It just needed to generate it, which is it just needed to curate this low. This is smart money's footprints. This is why I like trading ICT because you're busy outside. But anyways, if you like the video, man, get a like. If you like the video, man, put a little comment. I'm about to get up out of here. So catch you on the rebound. Say, Cause now I gotta start studying. I gotta go get to my studying game. I got a lot of shit to go study. So, nigga fucking lost last week. I'm down what? Like $500, I think. Fucking 200 fucking points. I'm down on the week. But don't worry about it. We're gonna bounce back. Cause how you think creates how you feel. There you go. Look, how you think creates how you feel, right? And how you feel becomes an emotion, and that emotion. So that's how I go. How you think creates how you feel. How you feel creates an emotion. That emotion gets drawn to you, and that emotion turns to a vibration. That vibration turns to a magnet that gets attracted to you. Type shit. I think I kind of fucked it up. Cause my handwriting. You know that. But anyway, I think we're gonna be bearish. If you ask me, for the rest of the week, might be bullish for a little bit. So ICT concepts is the best, bro. I ain't even gonna cap to you, man. But yeah, man. I got a lot of shit to study. I catch y'all on the rebound. I just want to give y'all a little my quick analysis. My analysis paralysis. You see, I just delete everything. I nigga be deleting shit. But you see, I delete the shit because I don't really you get better when you delete and just redo it. Delete it, redo it. Create your analysis, redo it again. But anyways, I catch y'all boys on the rebound. Yo.